news on Dalal Street. Sensex Rallies, another 1,000 points. Nifty reclaims 11,600 for the first time in 2 months. Mid-caps also rally in tandem to mark the biggest ever two-day rally.
Banks lead from the front once again. The index gains over 5%. HDFC Bank, ICICI Bank and Kotak are the top performers. The Bajaj twins, Bajaj Finance and Finserv also surge.
Auto stocks power ahead after the corporate tax cut. Industry veterans R.C. Bhargav of Maruti Suzuki and Pawan Goenka of M&M rule out any major reduction in prices. Rajiv Bajaj says the government's move has bolstered their ability to invest in new technology.
L&T is amongst the top Nifty gainers, rallying over 8% today. CEO Mr. Subramanian says the tax cut will provide a fillip to private investment, which has been lagging behind for the last couple of years. He also adds that the buyback option for the company is still on the table.
Earnings upgrades continue to pour in. FMCG, energy and metal stocks all trade higher after brokerages raise EPS estimates on account of the corporate tax rate cuts. Well, there's no stop to the Bulls' party on Dalal Street as corporate tax cut announced on Friday continue to cheer the markets. Nifty ended at 11,600 while its Sensex is now above 39,000. Hello and welcome to yet another edition of Bulls Charge Ahead. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant, what a day.
And it's a ferocious charge. I mean, if I might add, for 2 days now, just incredible the move. We can go into all kinds of trivia and statistics. The best 2 days ever for a couple of indices, stocks. I mean, haven't seen this kind of market in a long, long time. It's a full house today. We have the big market voices on the impact of the corporate tax cuts. But that is not all. We also have key industry voices and what they make of the finance minister's big announcement. Let's take a look at how, first of all, the markets fared in a trade today. What happened in those 6 hours of trading? Lata.
Well, at the moment, let's get an idea of the two-day rally rather than today's itself. It's 1,000 points up on the Nifty almost from the near 10,600 that we were on first hour of Friday or the last hour of Thursday. To be precise, we were, I think, 10,700. So 1,000 points rally, give or take a bit, and 5,000 points rally in Nifty Bank. That's a measure of the rally. Now we are almost in tandem with other emerging market indexes. I could divide the market into three. Rather than time-wise, I would divide it theme-wise. There are those companies where the EPS is going to be higher because you have to pay less tax. So from your EBITDA, you deduct much less tax, you get a much higher profit margin. That's what FMCG companies, even if you can include in that the Asian Paints, not just the Britannias and the Nestle's, but also, the Asian Paints, the Pidlights, all of them, Page Industries, even retails, D-Mart, all of them are in that category. Big 16 to 18% gains. Oil and gas, again, very big gains. So, some of it played out largely on Friday, but they continued to have a good day. And then there were the private banks, which had a great day on Friday and a good day on Monday as well. The IndusInd, Axis, ICICI, HDFC Bank, Kotak Bank. And then you have those that did not gain. That's the second theme. IT stocks, largely, none of them, most of them are extremely tax efficient, take exemptions which they cannot give away, and therefore they will not get the new tax, but will continue with their old tax level. So no change category. And then there are also stocks like Dabur, which are anyway run with some exemptions and therefore will not get to the new tax slab. The third theme was stocks with negative news. And there were two very prominent sets, or rather one set and one individual company. All the ADAG shares were down because of the downgrade of Reliance Capital. In a way, the last man standing. Rel Infra, I think, has still not been hurt much. Otherwise, all the other group companies have been either NPAs or defaulters. And this one obviously hurt very big. And finally, Z, the lenders... some of the lenders could be pressuring the company now that is asking for an extension of the deadline to repay. Well, that's broadly the theme that played, but more color on detailed stocks from Prashant.
So it's all green, Lata, so it's a pretty easy screen to run through, except maybe two sectors, and I'll come to that. But private banks, FMCG, MNCs, the small cap index, consumers, auto, gains, and I'm talking about sectors, all between 4 and 5% higher in trade today. Pharmaceuticals and the IT index ended lower. I mean, those are the only two indices which were in the red. So big Nifty gainers first. Financials, I mean, across the board. Bajaj Finance, Finserv, Axis Bank, Kotak Bank, IndusInd, ICICI, HDFC Bank, and it showed up on the Bank Nifty, as I said, in a very, very big way. BPCL was higher. IOC was up very strongly from the oil marketing pack. L&T was looking good. Aisha, I mean, just a huge move. 15% or so at one point, 7.5% by close. Asian Paints and ITC were the other big ones. I mean, actually, ITC did not participate too much on Friday. It made up for that today. What was lower? Z, as you mentioned earlier, Infosys, and there was Tata Motors, which was down about 4% as well. All right, let's talk about the broader market. And again, a big list. Ashok Leyland comes up. I mean, Escorts I mentioned earlier. Exide on your screen. The consumer names, Colgate, something like Avenue Supermarts, Bata, big gains. And then there were names like Adani Ports. There was Sun TV, BEML, ABB, Bajaj Holdings. The brokers did very well. Actually, I mean, a couple of brokers that I spoke with said that volumes on Friday and today, I mean, daily volumes have more than doubled as compared to the previous days. That should help. ISEC and Motilal both were up strongly, and something like a Lemon Tree Hotels about 11% higher as well. So only green I'm highlighting from the broader market, but that was not the case. There were losers as well, but it was an overwhelmingly positive day. Lata.
Okay. Well, actually, some of the brokerages are also gaining because of the wealth management business likely to do well.
Yeah.
Now that, there will be a renewed interest in equity and perhaps all kinds of assets. Well, while the markets have cheered the corporate tax cut, is it enough to jumpstart the economy? The street seems to be divided on the issue. Rhythm Desai of Morgan Stanley believes the move is a permanent tax relief that has altered the cash flow of corporate India. Atul Suri agrees, says the change in sentiment should result in more investments.
We have to appreciate that this is a permanent relief on taxation, so it alters the free cash flow of corporate India to eternity. So we must appreciate that upfront. It's not a one-time thing that happens, say, this year or next year, and then it's over. It completely changes the competitive dynamics. And I think it will eventually lead to a much more robust private investment cycle. So if there was one factor that was ailing India's growth rate, it was the fact that private investments were falling every year for the past 8 or 9 years. After peaking at 17% in fiscal 10, it had declined to 6% last fiscal. I think this is these announcements, particularly that discounted 17% tax rate for new manufacturing units that go on stream by March 23, I think has the potential to lift the private investment cycle.
More important is going to be corporate performance and how this whole thing will pan out in actual corporate revival. Yeah. And here I feel what has changed, as I said, we don't know what the numbers are. They will play out with time. But what has changed is the sentiment or hope. In the last 3 months, we had given up hope that a revival will happen. We realized that this will be a slow, self-correcting mechanism. The government's going to do nothing. Yeah. And now what you really have is a scenario where you know that the market knows that the government can do stuff. The first bit is what is playing out, which I think is a short covering bit. I think this would take the market to around 11,700 to 11,800, and which I think could pan out in this week because we have expiry this week. However, I think the second bit, which I think is a more medium-term targets, is to around 13,500 or thereabouts, which I say is a medium-term target where I think the whole other dynamics or really absorption and understanding of this would pan out. What you really see is going to be a covering of this that's going to happen out. And as I said, expiry day is always a very great cutoff day. Quality is going to lead the rally, however unpopular it is, because people find it very difficult to buy stocks which have run up, buy stocks that are in 4 digits, buy stocks that are expensive. But I think that's where you'll have to bite the bullet. Repeated this line by George Soros many times, bull markets are built on walls of worries. If you look at global markets, it's not just the Dow. Brazil is making a new high. Canada is. Even a country like France is making a 52-week high. You look at the global world indices, there are so many of them up there. So yes, there are going to be issues. There is trade war, there's Iran, all these things are known to the world. And yet the world or those markets are doing something.
Okay, that's one set of views. On the other hand, we had someone like Victor Schwetz of Macquarie Global Capital who believes that there is no evidence to prove that the corporate tax cuts which have been effected end up boosting the real economy. Arvind Sanger of Geosphere Capital welcomed the corporate tax cut, also adding that the change in tax policies may not be a sufficient condition to jumpstart things. Listen in.
It's amazing how supply-side economics never dies, even though there is ample evidence to show that in most cases tax cuts don't work. And the reason for that is very simple. Tax is only one variable out of many variables that corporates take into making a decision. Other variables are far more important. Things like regulatory clarity, things like public service corruption, things like inefficient government regulations, things like monetary policies, technology and how technology evolves. All of that is far more significant than the taxes. If you want to have a short-term stimulus, there are far better ways of doing it. Instead of cutting corporate taxes, you should be trying to cut income taxes or GST taxes. Or alternatively, you could have a stimulus in a specific part of the consumption-based or production-based economy. But over the longer term, if you cut taxes, but you also look at other aspects of the economy, that could be a powerful package. India has a crown record of 8, almost 9 years, consecutive years of earnings per share downgrades. I can't think of any other market that suffered such a consistent downgrade cycle. What I think tax cuts are doing is essentially preventing another downgrade cycle. That's also what it does. It actually stabilizes your multiple, because right now India is trading on the highest multiple in Asia Pacific, or pretty much anywhere. So I don't look at it from the point of view of raising numbers. I'm looking purely from a defensive perspective of avoiding downgrades.
One is that the earnings for the Nifty companies went up by more than the market went up. So in that sense, if you keep the PE constant, then market should have gone up by even more than it did on Friday. So that's just the simple math of the market move relative to the earnings uplift that most of the Nifty companies get from the lower tax rate. This is a move that has clearly come as a strong signal, and I'm hopeful that there's more coming in terms of, a lot of the investment decisions that have been lacking are not only because the tax rate is high or not high, but also because the business environment has been seen as not very favorable. Domestic demand stories, whether it is cement or it's real estate or it's auto, are areas in which we could see some interesting, upside. But again, there's going to be a bit of a euphoria rally. We want to be selective and careful not to get caught up in the euphoria. The real issue is there follow-up action by the government to show that this is not a one-off, but this is part of a well-thought-out strategy. The business environment has been seen as not very favorable, whether it is in terms of harassment of tax by tax officials, or it's been uncertainty about tax policy, or it's been liquidity issues, or it's been in general malaise in terms of confidence in the economy. I think this can really jumpstart all of that if the government follows through with other measures to ease doing business and frankly tackle some of the things like the land and labor issues that are, if you're trying to attract companies that are going to Vietnam or Southeast Asia from China, then the tax policy is helpful, but it's not sufficient. It's not sufficient. It is necessary, but not sufficient.
Okay, that's kind of tempering expectations. So, both points of views there as far as the corporate tax cut impact is concerned. We move on to the second headline of the day then. Financials led from the front once again. The Nifty Bank Index gaining over 5%. Names like HDFC Bank, ICICI Bank, Kotak Mahindra Bank were some of the top performers. Bajaj Finance, Bajaj Finserv also surged 8%. Lata, what a performance, right? Absolutely stunning.
Oh, absolutely for the NBFCs, but even for the banks. And there I can tell you a bit of numbers. the earnings growth for all the banks will not be very high in FY20 because the tax will continue to be high. The EPS gain will come in FY21, but return on equity is going to increase across the board for all banks. That's, whether it's IndusInd, HDFC Bank, Kotak Bank, Axis Bank, all of them between 2 and 3. Actually, HDFC Bank, the return on equity increase is the highest from about 17% to I think almost 20%. Yeah, across the board, it's actually about 2 to 3 percentage points, includes the public sector banks. So that's SBI, BOB, PNB, also seeing a return in equity rising. But just a word on the current year's taxes itself. Many of the banks which made losses or even provided for in previous years could get a deferred tax asset because when you provide, you get a tax gain. But because that year you didn't pay any tax, you defer the tax gain to the next year. But that tax base was 35%. Now you have only 25%, so you have to write in 10%. And therefore, there will actually be a higher tax payment for some of the banks which made losses in the past, like, State Bank, Axis, ICICI. So immediately there isn't a gain, but in FY21, when the deferred tax asset, this is a one-time problem for some of the banks who have taken this deferred tax asset. The ROE for all the banks gets better, and it'll be easier to raise money now because there is going to be a permanent gain in profits, and therefore the return on equity is assured.
Okay, I mean, that's some numbers as far as financials are concerned. The third headline, then we're moving on. Auto stocks was the other sector which rallied in trade in the back of last week's tax cut announcements. The auto index itself ending about 3% higher. Maruti Suzuki, Bajaj Auto and Eicher led the rally from the front. The auto industry veterans gave a thumbs up to the tax cut, but Maruti's R.C. Bhargava and M&M's Pawan Goenka ruled out any major reduction in product prices, vehicle prices, due to these tax savings which will accrue to the companies. Meanwhile, Rajiv Bajaj of Bajaj Auto said the move has bolstered the company's ability to invest into new technology for electric vehicles. Listen in.
A wrong expectation has been sort of coming out in the last 2-3 days that because of this, corporates or auto companies would be able to or willing to reduce prices significantly. Let me first make a point that the call that the government of India has taken is, rather than doing some short-term stimulus, they're going to put money in the hands of the corporate for long-term, medium and long-term growth. And what this will do is get the capex cycle going. What it will do is get higher capacity, higher employment going, rather than an immediate sort of demand stimulus.
I believe what has been done by the finance minister will be of enormous importance for getting new investments into India and of motivating existing companies to invest in a large measure in capacity modernization, capacity improvement, and such other capex which is required by industry. I don't think it can have a very major impact on reduction of prices.
Well, from my point of view, this has been extremely positive. First, as much as everyone else has also said, this is outstanding for the long term. And that was always my contention, that whatever is done should be done for long-term competitiveness and to make strong companies even stronger. So let me give you a specific example. With this kind of a windfall, the ability of a company like Bajaj to invest in technology for the future, particularly with electric vehicles, is really bolstered. And you will see in a matter of weeks the impact of that. So that's a big positive for us.
Okay. They can invest in technology on the one hand. On the other, there is very little space for further price cuts because of the tax break. They believe the discounts are already in there. We take a break on that note, but do stay tuned. We're going to be back in a jiffy with lots more very important corporate and market veteran voices.